Yeah, so we have a really busy day today and a really exciting and hopefully busy stream as well. Like Nick just mentioned, we did have ADP non-farm employment change numbers come out just a couple minutes ago, much better than expected here at 278,000 jobs compared to the forecasted 173,000. And in just a couple minutes, about 8 minutes or so here, we have unemployment claims happening, expected at around 236,000 jobs. And all of this coming before the NFP event happening on Friday. Tomorrow we have the new unemployment rate. So this is just a little bit of kind of that pre-NFP information. And we mentioned that it's going to be a longer than normal stream. And that's because here at 10 a.m. we have the ISM manufacturing PMI.
You could get cheeky and you could say, well, what about this area? That's maybe a start, but I think real bullish pressure comes if we start to break out higher. This is not something I'm talking about trading in the next 15 minutes. This is something I'm talking about watch for the next few days because a bigger trend could form either direction on gold, and that is part of the reason. We just had our numbers, guys, by the way. I'm sorry for missing that initial reaction. We have unemployment claims coming out here in just a moment. Gold is reacting already. We're seeing gold shoot to the upside, which could suggest that we had more than expected unemployment claims come in. We are still waiting on that number to see if anybody has it. Please feel free to share it in the chat. When you do have it, there it comes, 232,000 unemployment. So this is a tick up from our previous. So coming in as forecasted, just about at 232,000 unemployment claims compared to previously we saw 229,000 unemployment claims.
Man, getting a nice tan out here. How you doing?
Dude, I'm getting cooked by the sun and by this Euro Yen trade I'm stuck in. I took a sell trade.
Dude, you need the EdgeFinder.
The EdgeFinder?
Yeah, if you had the EdgeFinder, you would have known that smart money was actually long.
Really? So you're telling me I was selling when smart money was long, and if I had the EdgeFinder, I would have known that?
Exactly.
Pass me one of those EdgeFinders. Let me get one of those. Get our biggest discount of the summer. Get access to the EdgeFinder, our MT4 and MT5 softwares, indicators, and robots, all in a single 20% off discount offer. Take advantage using the links and promo codes down below in the description.
In terms of just high-level brief fundamentals with the Kiwi, the central bank there has the governor there has pointed towards basically a lot of dovishness, which is the idea that, of course, they're not looking to tighten their monetary policy further, whereas you have other central banks who still are. Tightening monetary policy generally causes appreciation of the currency. So with those announcements, we've seen the Kiwi really lose some of its steam. And Miko, we were just talking briefly before the show got started with you guys. I was mentioning that, big money, when they make moves, it's not something they can do just like that, right? They have to, they have ginormous positions to fill and they have to move in and out of things. So it's been kind of an interesting one to watch, that NZD specifically, as that pivot in monetary policy has caused some really strong new trends, reversing some of the upward trajectory as they had one of the highest central bank rates from the major economies. They pivoted essentially. They basically have said, not looking to rate hike further. And that announcement caused a major unwinding of the Kiwi strength. And again, you're pointing out some of the AUD and NZD weakness that has been present, catching on to it, and some of the technical trends as well. So that's really cool. And we'll have to come back to you on some of those pairs as well. Marko, yen pairs. Where are you at? I know you trade you're a little lower time frame than Miko and myself. What are you looking at here today? Anything that catches your eye on the yen side of things?
So yeah, first let me take a look at EJ. So for me, EJ is now kind of pausing from this move to a downside. I mean, the move has also not been very strong, so this one is not that interesting to me. I'm waiting for a large move up or a large move down. Then I have AJ, which is kind of also not showing me the strength I want to see. I'm not seeing those strong momentum legs. So the only strong momentum I saw was actually here. And I did take a trade, a sell short. It was a 1% loss, but again, fit my plan. and I really liked the momentum coming down with these strong bearish legs candles. So that's kind of what I'm looking for, consecutive red or blue candles. But the one that is on my watch list is NJ. So I really like how it has been moving for the last couple of weeks, especially with the move up and then the move down. So on the 1 hour chart, I do like this drop and then consolidation, and then we continue with the move. So this just may be another consolidation before NJ shows us another leg down. At least that's what I'm expecting. So my bias is for this to go further down, and I'm seeing some clean price action, not much chop. So out of all of them, I like NJ the best.
And Aussie Swiss as well. This one's not too far away from my area here too. Lovely support there, had some consolidation, market broke through with not bad momentum. I'm looking to see if we can come back into the lows here of support, retest that structure. Next lower high, we've got one over there. Second, trying to see if we can get a third for another move back down into 0.586. And again, flicking to the higher time frames, we can see AUCHF particularly very bearish on the daily, weekly, and even monthly as well. So a lot of bearish momentum there, just trying to take advantage of that.
Yeah, and Miko, I want to show you something that's kind of fun with the Aussie pairs specifically. I like that you went through that because you mentioned several Aussie pairs, and you're going to find this pretty cool, I think. So in terms of sentiment right now, we track sentiment often on the channel. People in the audience love it, so we talk a little bit about it. So two things I want to show you on a quick basis, specific to the Australian dollar, which, you know, if I'm looking at the Australian dollar, this gives me a little bit of extra confidence in what I'm trading. So first of all, in terms of COT report, this is just objectively, it is a delayed report. We get it once a week. It's not necessarily, you know, lightning speed up to date what the institutional money is doing, but it's a delayed look at where their positions generally fall. And what we see is that on the Australian dollar specifically, institutional money is very short as well. That adds extra confirmation if you're looking at the Australian dollar and you know, well, the professional money managers of the world that have to report to the CFTC, notably the big ones here in the United States, they're short, hefty on the Australian dollar, with long contracts making up just 34%. And again, short contracts making up 66% approximately. So it's a hefty short position, it seems, from institutional traders. So that adds a little bit of confidence. But on top of that, Miko, what I thought was a very interesting component to the retail side of things is that retail traders are doing the exact opposite of what the institutional money is doing, being short, and yourself looking to short as well. Take a look at this. We've got retail sentiment across the board. I've narrowed our focus here, guys, to just the Australian dollar, going off of what Miko showed us. Several of these pairs you mentioned, Aussie CAD, Aussie Swiss, Aussie dollar. Retail traders are super long. They're going against the trend. They're on the wrong side of that trade. They're doubling down. They're, you know, getting their stops hit or adding big positions to a loser. And then you flip it around and you say, well, what is retail generally short on? Well, they're short on Aussie New Zealand. New Zealand is the one that's sort of getting beat up a little bit more, that they're more long on. But then you have pound Aussie. There they go, shorting the pound and yet again buying that Australian dollar, which is on a sinking ship right now. So I think sentiment can be really interesting because you can look at what retail is doing, you can look at what institutional is doing, and you can get a general look at all of it at the same time. So I just thought that was interesting that you pointed that out, Miko, that you're kind of aligning with what sentiment, exactly where I would want to be as well on sentiment. So thought that was kind of cool. It's a pretty loaded day in the markets in terms of what's been going on. Earlier, we had, I'll go back to the FOREX Factor just for a second. In terms of what developed there, we had unemployment claims come out just slightly above expectations and above notably the previous unemployment claims that previously we had 230. We had just come out 232. So no surprises, I guess, there. But what was a little bit more surprising to the market was that we had ADP non-farm employment change, which is an advanced look, an early look, I suppose, at NFP numbers, came out hotter than expected, 278K compared to 173. This put a little bit of upward pressure on the dollar, but now that dollar has been back some of its strength. Gary, the last time you were here, we went over the dollar in depth, and I want to catch up with you on that. What's your current take on the dollar? Are you looking, does this look top heavy to you? Are you looking to continue buying it? Where are you at with the dollar? Any pair you want to go over, happy to entertain.
Yeah. Absolutely. So we're really focusing on the dollar right now because we believe the dollar is going to sink, and the reason behind that, I mean, you look at the job reports that came out. The Fed's already spoken about a possible softening on the interest rates just because of inflation starting to look a little bit better. But then I think what spooked the market a little bit was the actual inflation numbers that came out for the Aussies on Tuesday. I think it was Tuesday, and that showed high, much higher than they expected. And so we started to see some downside moving in the dollar. Now with the dollar moving further down south and jobs actually showing higher, that means that we could possibly still have big inflation issues. And I'll tell you why. Because, the one thing that Feds want to do is they want to slow down jobs, because in order to be able to control inflation, they have to slow down jobs. If we have a lot of jobs and jobs are booming, that's going to create more spending. More spending creates more inflation. And so it's all of the stuff that spirals out. Look, I'm not a fundamentalist, but I definitely look at the markets, and technically I look at the dollar. And I'm looking at the dollar right here, and we actually spoke about this in one of my sessions yesterday. We said that the dollar is expecting a correction move. But if you look over here, all right, we're not done with the rally yet. This move that we're having right now is just a short-term correction, and then another rally is due before the dip starts coming into play. And if I look over here at my previous high and look at where the 1.27 is, and that's not where I anticipate the fifth wave to be at, I could say that with confidence that this little dip right here is a short-term dip, possibly down to around about 12,900, and then we're looking at support down around about that area for price to move back up to about 13,000. And as it takes out that previous high, this might be where we're going to see a deeper dip on the dollar. So a lot of people look at the overbought condition right here and say, hey, we're overbought, we are expecting dip, and that's true. But this dip right here could just be a short-term dip and then go up bullish and create this negative divergence on the dollar daily, and that could indicate that further dip that we're expecting on the dollar. So I'm going to enjoy, and I have already. I just closed out this morning on the US dollar CAD. We took some profit on the US dollar CAD this morning, and we are going to still continue to hold bullish on the euro US dollar, and looking for the short-term gain. And then as soon as we start seeing the market on to turn at that bottom again, we're going to be back and buying dollar again.
Yeah, and it's an interesting play right now. You've had a lot of strong economic numbers, which have bolstered the dollar exceptionally. As you mentioned, strong economic numbers can give way to further inflationary pressures, which right now we know is one of the Federal Reserve's kind of key things that they're so focused on, is getting that inflation number back down to a what they deem a healthier number. And so until we really see that, the dollar pressure seems to be on, right?
As for the dollar in general, what would you say, I guess, short to midterm on sentiment wise? Because what we're seeing right now is less robust gains in the economic side of things. So we're looking at lower than expected lower than previous NFP, expected higher unemployment rate, higher claims than last month. This morning, jobless claims came in higher, and then another contraction in PMI, which is supposed to be like 47, right under 50. I was wondering what you thought of dollar sentiment going forward. Do you think we can see a break here, or that there's enough buyers in the market to take it higher?
Yeah, I mean, good question, Frank. I mean, first and foremost, I do what the market tells me I can do. Yeah, I don't pay too, obviously I'm aware of when the data comes out, how the economy works, and I keep an eye on these things, but I'm, purely a technical trader. So what I will base those decisions on is what the charts are telling me. That there's all the truth you need is in the chart. So for example, US dollar pairs, it feels like US dollar strength has paused, okay, first and foremost. And I'll tell you what is a big example of that is when you get better than expected figures, like we did with initial jobless claims and ADP non-farm, yeah, you know, they were far better than expected, but we are seeing, you know, in this example, Aussie dollar, US dollar, let's drop down to the hourly chart. We are seeing US dollar weakness. Yeah, that is a really big indicator for me. If pairs start ignoring the news almost, yeah, because, you know, if you traded purely the news and you saw those figures today, you would potentially short Aussie dollar, US dollar. But the market has completely ignored those figures. Yeah, we're seeing quite the opposite. We're seeing US dollar weakness. So short term, you know, we're going to see a bit of a retrace, yeah, on some of these US dollar pairs. Where to, you know, is the $1 million question. And I will just trade my strategy until I get a setup. But, you know, on the day chart, just looking at this buying pressure we're getting, you know, we could retrace into this gray zone, potentially, you know, up to here. But if we start looking a little bit longer term and, you know, take a look at the weekly chart, there is no reason to expect anything else other than US dollar weakness. Yeah, because if you look at this chart, you know, that weekly chart has broken down. And the fact we had a range, yeah, and then it broke, this tells me that the longer term direction of this pair specifically, but the US dollar in general, is US dollar strength. Okay, obviously this can be impacted by, you know, the data that comes out, the NFPs, you know, interest rate decision. But looking at that chart, I'm expecting prolonged US dollar strength on a mid-range time frame. And the shorter time frame, I'm expecting a little bit of a retrace in this US dollar strength.
And again, guys, we got breaking news here. Check it out. All right, and numbers should be coming out here momentarily on the new candle. Here it goes. Dollar driving lower still. Euro pushing higher. NASDAQ seeing a push, trading at 14,285. Here goes gold trading up, 1976 printing here. And there goes that NASDAQ. Look at that strength coming in yet again. Dollar weakness. NAS is up. Gold trading around 1976 here. Let's see if we get some numbers. 46.9. This shows further contraction in manufacturing PMI. This is what the market was looking for, and so the market is happy about that.
Did you know that you can watch Trader Nick live stream every morning, Monday through Friday, with guests from all around the world? Each morning, right here on the A1 Trading YouTube channel, we put on a live show where Trader Nick, along with some very special guests, go over their charts and ideas for every kind of asset. We do a live reaction to news drops and do analysis immediately following. You never know what's going to happen during one of our streams, so come be a part of the live stream community. You can find our live streaming schedule on the A1 Trading Twitter account each week, so you never miss a news event. Don't forget to check out the links in the description if you want our broker recommendation, access to our free Discord, free EdgeFinder, or want to chat with us on Telegram. Remember, you can watch us live in the markets every morning starting at 9:30 a.m. Eastern Time, and we have lots more free trading tools and content available on our website, a1trading.com. Thanks for watching.